Hello, welcome to today's video. And in today's video, we'll be looking at how to trade Fibonacci level together with Trendline. But before we start, let me use this opportunity to thank you all for supporting this channel. Thank you for sharing my video. Thank you for the likes. Thank you for always supporting this channel. And again, let me use this opportunity to say Happy New Year to everyone watching this video. I pray that whatever that you have wished for in this year comes to pass. I pray for favor and goodness of God upon everybody's life. Let's pray that this year give us the best of our life. Okay, always be good to people, and God will also be good to you. Thank you very much for all the support last year. And this year, I pray that we take this channel to 10K subscribers. I know it is possible. By the end of 2024, we should be able to hit that target. Now, without further ado, let's get straight to the content of the day. Yeah, as I said, we'll be looking at how to trade Fibonacci level together with a trend line. Okay, so as if you've been following me for a while now, you know that the trade that I normally take is USD JPY. Mostly I focus on one pair, then that is what I use. So if you can see this trade, I'm on the 4-hour time frame. Okay, I'm on the 4-hour time frame. Sometimes I do my analysis from the daily 4 hour to 1 hour. Okay, so right now I'm on the 4 hour, and as we all can see right here, the market is hot, bullish. Okay, this market is very bullish from all the way down here to the top down here. Okay, the market is bullish. You can all see that. Now let's look at what's happened after this level. So I'm going to play for us to see what's happened after this level. Okay, so as you can see, what I did was that as this market was going upwards, it creates a higher high and not a higher low. That is an upward trend. Now, when you look at this market, it creates a higher high over here, then it pulled down, create a lower high, then it went up, but it did not create a higher high. So what did I do? I take my rectangle tool, then I draw this line. Remember what we've learned about double top. If you have not watched that video, please go back and watch it. It will help you. I promise. Go back and look for the double, how to create the double top or double bottom. It will help you. So now I take this rectangle tool and I draw the double top formation. So as I drew that, I was waiting to see if this low will be broken. So I just have to wait. At this point, I'm not doing anything because I do not know the direction of the market again, because it has not created a higher high. So at this point, we all can see that this low has been broken. Okay, this low has been broken. Now, what did I say about change of direction of the market? Change of direction of the market, you have to look out for what? Two things. Okay, you have to wait for the market to break the low, go back, come back and break that second low again. Okay, so let's look at what happened over here. At this point, I wouldn't trade. Okay, the market is about to change direction to the downside based on this double top. Okay, based on this double top. And remember, even what we look at the other time, how to set take profit of what double top and double bottom, you could see that half of the odds, the double top has been hit and went back and it has hit fully. But we are not talking about that today. What we are looking at is what? How to trade a trend line together with Fibonacci levels. Okay, so let's continue. Now, you see that this high was the one that caused this low to be broken to this side. So we are waiting. I am waiting to see this low got broken. Then I'll confirm that market is now bearish. Okay. At this point, I'm not trading. Looking at this support and resistance level, I am not trading. I want to confirm the direction of the market first before, if I'll take action, I'll take action. So let's continue. So as we can see, market has broken hot this low. Okay, sorry about that. Market has broken this low. Okay, let me move it up small. Market has broken this low. I believe you can see that a candle has closed below this low. So what do I need to do? At this point, I'll take my Fibonacci tool. This is the high that caused the break of that low. Okay, take my Fibonacci tool, then I'll mark it out. Now, what am I expecting? I'm expecting the market comes to what? This region. Between 0.5 and 0.61 region. Okay. And when it comes to that region, I do not just enter the market. No, I do not just buy or sell. I also wait for my entry confirmations. The market can come here and manipulate before going down. But at this point, I would have to wait for what? My entry confirmation. So looking at this thing, this is the first one, first break, second break. Now I have confirmed that market is downward. Okay, I've now confirmed that market is bearish. Since I've confirmed market is bearish, all I have to do is what? Look for my entry confirmation. So as you can see, my entry confirmation is what? Let me remove the Fibonacci level so that you can see its work. This is the level that I've marked. Well, market has come to that region, and if you've been watching my video for a while now, you know that I look for what? Engulfing candles. So looking at looking for engulfing candles, all I need to see is this candle here. So as soon as I see that candle, I'll go in for what? A sell. I'll go in for what? Short position. So I'll enter somewhere here, put my stop loss a little bit above this. Then I'll set my take profit a little bit below this. Okay. So always make sure that your risk to reward is what? The least you get is what? The least you get should be what? 1:2. I'll do another video on risk management, but today let's focus on this. Okay, so as you can see, by this you would have taken profit because it's almost hit. Okay, it's almost hit. Now at this point, how do you see the trend line? Before I forget, you see as it created a double top and these two structures has been broken. Quickly I take my trend line to, then I draw my trend line like this. Okay, remember I use the wicks to draw a trend line. I use the wicks. Okay, so my trend line will be something like this. Let me come in and adjust this one down a bit. Okay, my trend line will look like this. Okay, so what do I expect? I expect the market to come down since, you see, I expect the market to come down since you have confirmed the direction of the market. Now, what can you see again? As this as we enter the trade over here, this low has been broken. Okay, a candle has closed. This is it. Let me show you. You can all see it. A candle has closed below this low, meaning that what we can look for another entry again. What we can look. Let me reduce this one to this level. We can look for another entry. We just take our Fibonacci to we mark from the high, which is this, to this low, then we extend it. Okay. Now, where do we look for our entry? We look for our entry area at 0.5 to 0.61. Okay. What can you see? Market has come to that level. Market has come there. Can you see that? Market has come there. Market has come there. And I said I always look at for engulfing candle for my entry. Looking at the rejections, I look for engulfing candle. And where is that engulfing candle? I can see engulfing candle right there. This is my engulfing candle. Then I will go for a stop loss that is a little bit above this. Then my risk to reward, remember the minimum should be 2. Okay, the minimum should be 2. So assuming you've entered this trade, you would have catch how many pips looking at, and also you close your trade. You don't set TP with a set distance. You attempt to leave it open, but you monitor your trade. You take profit when there is a rejection at or risk to reward of 2 going. Okay, but as soon as you talk about risk management in another video. So looking at this, you could have got 1:5 risk to reward, but let's keep it at where it is. Now from there, let's keep playing and see what happens. See, market came all the way up again. Okay, so we also look for our Fibonacci 2 again. Then we draw. Okay, then we draw. Remember what I told you that at times market will manipulate the Fibonacci traded. Those who trade the Fibonacci levels, to take you out of the market, then it will go in your favor again. Okay, so this is our 0 point. This is our region. This is our region. Okay, and market bypassed that region, went all the way up, then started coming down. Okay, now poof. You see, it has come back to our region, then poof. What do I look at for here? As a trader, at this point, looking at this engulfing candle and a tweezer top with the engulfing candle, you would have entered. You would have entered a short position there. Quickly enter a short position because you already know the direction of the market. Okay, set your stop loss a little bit above. Risk to reward should not be less than 2. So we target our recent low 1:2, 1:3. We are good to go. Okay, then we hit our target. So that is it. That is it. Okay, guys, that is it about Trendline and Fibonacci levels. So you can notice that this is working. It's moving with the trend line. Okay, it's moving with the trend line. So you would have to be careful when it's approaching the 0.5, 0.6 rating, because at that point it could go up and break the trend line, then change your market direction. Okay, everything has to be steady. You have to, but mostly it works short when a market change direction. So first one, second one, as soon as the second one got broken, the pullback, this pullback, enter and hold it for a while. Okay, enter and hold it for a while. So when you enter over here, imagine you hold this straight for a while, you will be targeting hot over 1:5. You just take only one trade, then you are good to go for the week or for the month. Okay, so that is it about Fibonacci and the trend line. Thank you very much. If you have not subscribed, this is the time to subscribe. Hit that like button, and I'll see you in my next video. Bye bye.